Good evening, ladies and gentlemen. I can see it is now 7:30 and it is the time when we promised to start our webinar this evening. Thank you all for coming and for joining. As we give guys just one more minute to join, I will just introduce myself. My name is Rina Hicks. I'm the Operations Director at Faida Investment Bank, and I'll be your host or moderator this evening. And perhaps what we can do as we warm up to listen to this conversation around the strategy we should have for equities investment in 2022, could you kindly just let us know, where are you watching us from? Where have you logged on from? You can post it in the chat. Basically, what we're going to do today is we shall have a session running on this equities investments 2022. We will carry on and begin to talk about the swings we've seen in the last few days. From there, we will look at the banking sector. You know, we're expecting results announcements soon. What are our expectations and what should we be expecting? And then lastly, we will look at what should we do in 2022 where investing in shares or stocks is concerned. So let's see, where are we? Where are we? I am logging in from Nairobi. I can see Florence from Juja. Thank you so much, and Karibu. I can see Catherine from Syokimau. Wow, we have Sylvia joining all the way from Geneva, Alex from Machako, Stephen in Naivasha, Karibuni Sana. I can see Charles from Githongori. I have Alfred from Ungatarungai. But there I was in Ungatarungai on Sunday. Beautiful place. Emmanuel from Nanyuki, Andrew all the way from the States. Welcome. We have Kelvin from Mountain View, Debbie from Kikuyu, Kennedy from the UK. This is amazing. We have Alex from Roiro. Karibuni sana, guys. It's lovely to see you here. Lovely, lovely. We have Albina, I know your name, from Qatar. It's so good to see you, Albina. Fantastic. Abdi from Madare. Welcome, everyone. Fantastic. We have Thuo from Mombasa. It's amazing. So many people. We have Maureen from Burundi. Welcome. Karibuni sana. The reason we're doing this as Faida, we decided to start doing webinars every single month to help our customers and those who are not necessarily our customers. So it's open to everybody for free to understand the different things that they need to, where the different investment options are concerned. And we want to make it topic. So we're not discussing theory. We want to be able to discuss items that are happening now. So the last webinar we had was actually on bonds, and specifically on the IFB that was listed or that was offered by the government, to kind of give our clients and our customers an idea of, should I invest? How should I invest? How should I bid? At what level? We also took everybody through the prospectus to understand what the different aspects mean. If you joined that webinar, I hope you managed to invest. If you didn't manage to invest and you still want to invest in bonds or in the IFB, it's now trading. It closed at 12.95% as the coupon, and it's tax-free. If anybody is on the call and is very interested in that, please do reach out to us. My colleagues post our contact details on the chat, so you'll be able to get to us. But today is not about bonds. Today we're talking about equities. But for the benefit of those who have no idea who we are, I will just take 2 minutes to just explain who we are, why we are here, and introduce our panelists today. So our company is Faida Investment Bank. Faida Investment Bank is wholly Kenyan-owned and operated. We were incorporated in 1994, so we've been around for quite a number of years. We are licensed as an investment bank by the Capital Markets Authority. The Capital Markets Authority is the regulator for the industry. We also have a presence in Rwanda, but in Rwanda, we are known as Faida Securities Rwanda, and we have affiliates in Uganda and Tanzania. So if you're on a call and you need to do transactions or valuations or issue stock, and you are in any East African country, we are available and able to assist you. And we also have a deep local and also regional knowledge and experience. We've done work in all the East African countries, including South Sudan, and we have a wealth of experience and understanding of the local regulatory environment. So this is just a quick summary of our services. We offer stocks and debt trading. So if you want to buy shares or fixed income securities such as bonds or treasury bills, we're able to do that for you, as well as trade them in the secondary market. We offer transaction advisory. This one is usually to companies that are looking to raise capital. We do that. We offer private equity placement. So if you have a company that is mature, you're looking to grow to that next level, but you want to bring in new shareholders and you're not looking to list the company, we're able to help you get private equity investors to come into your business, balance sheet restructuring, financial arrangement for institutions, investment advisory, and also market research. So today we are looking at the equities stock market. I have a confession to make. Can I be real? A few days ago, when Ukraine decided, not Ukraine, but Russia decided that they're going to start this war and attack Ukraine, and the stock market did what it did, and my colleague will be sharing what that is, I actually panicked, and we were like, oh my gosh, you guys, what do we do? So we might be in the sector, and it's the confession is the real thing. We're in the sector every day, and the fact that we're in tune and know exactly what's happening is not necessarily an advantage. A lot of times we ourselves, me, is very confused, but we have on the call today, not people like me who get confused by watching stocks every day, but people who are technical experts. We have on the call Jeff Masharia. Jeff Masharia is a trader. He's been a trader for the last 15 years, trading equities in the Kenyan stock market. And he's done lots of trading for institutions, both foreign and local. Jeff, if you can unmute and show yourself, wave, that'd be great.
Good evening, everyone.
And then we have Ivy Barongo. Ivy Barongo is a senior investment analyst at Faida Investment Bank. She's been an analyst for the last 7 years, and her work and her role is to really analyze the different companies that exist that are within the scope of our I guess, work, being stocks that are listed, also those that are looking to raise capital and provide advisory services around that. So Ivy, you could say a quick hi.
Hey, good evening.
So we're going to start with Jeff, and Jeff is going to be talking about the swings that we've seen in the last few days. And what then should we make about it so that we're not as confused as Rina was a few days ago. So Jeff, please take it away.
Thank you so much, Rina.
Sorry, Jeff, before you go,
Yes.
Ladies and gentlemen, we have a Q&A box. There's a chat section and there's a Q&A box. So the Q&A box is where we should put in our questions. If you have any questions at all, please put them there, both now, if you have any, and as we go, and then we will have a Q&A section towards the later part of this webinar. Thank you. Go ahead, Jeff.
Thank you, Rina. As introduced, Jeff is my name. I'm an equity trader with Faida Investment Bank, and just here to point out and help, hopefully, people see that there's still opportunities to make money in this market, especially in times of uncertainty. As she hinted, the most recent panic began last week, and when Russia decided against, common sense to invade Ukraine on the 24th of February, I believe, that ended up being a big shock to financial markets worldwide, and we witnessed sharp sell-offs, bringing prices down. I think our market dropped about 4%, which is the largest dip since the initial onset of the COVID-19 pandemic. So what essentially that means is that when there's panic in the market, people need to be ready to buy. Reason being is because markets tend to look a bit more into the future. And once the bad news is out, and as soon as the market feels like the worst of the bad news is out, you always tend to see the markets start to recover, even in the midst of the crisis. So I'll point out, say, Safaricom, which was at about 37 shillings before the Russia move. We dipped to as low as 34.5 shillings the day after. But since then, especially with talk also of the, negotiations between the two countries, it has slowly edged back up to currently 37.5 shillings. So that shows that in the last week or so, the price dipped, yes, initially, but has since recovered about 8%. So we'd like people to know that even in the midst of any crisis that you see in financial markets, it's a very good time to be prepared to buy. And this has been the trend over the last week. We are still on the recovery path, and my colleague will touch a bit more. The other key thing we'd like people to be on the lookout for is that we are approaching the banking sector announcements of their performance for the year 2021. If from the one company that has announced, it shows that we're in for a bumper season. So this is the perfect timing for anyone with some money to spare. Reach out, we can guide you through and help you pick the right stocks based on what my colleague will share.
Thank you so much. Thank you so much, Jeff. I think you've summarized it well. There was a panic, and I think the point is for us to see and understand, as long as you're investing in a company that is solid from a fundamentals perspective, that it's a company that's well run, has a product that is has got demand, that is in an industry that is growing. Even if you have cycles happen, I remember 2020. When I remember that day, I think it was the 16th of March. Was it the 16th of March when the president announced that we have a case of COVID in the country? It was a Friday, wasn't it?
Yes.
I remember Safaricom dropped to 23 shillings. And then, you know, we were like, oh my gosh, is it going to drop anymore? But we realized later that it was an overreaction of the market. In fact, it was a market hold. So to see now that the company, where we talk about 37.50, so anybody who's been able to take that risk at that time has done quite well. So thank you so much for that summary. If you have any questions, please continue to put them in the chat. I want to invite Ivy now to come, and then we'll open it up to question and answers so that then we can really delve into the areas that you'd like us to discuss. So go ahead, Ivy. In the banking sector.
Thank you, Rina. I'll take you through the banking sector and the expectations for 2020 results. As Jeff mentioned earlier, banks are expected to release their 2020 results sometime between now and the end of the month. So for the banks listed on the Nairobi Securities Exchange, we expect to see increased activity in the counters that are listed. So we should be on the lookout for that, so that we can take advantage of any opportunities. In terms of results, we anticipate an improvement in profitability for majority of the banks, considering that especially towards the second half of 2021, there was an improvement in performance. So you'll see that in growth in ratios such as return on equity, return on assets, which basically assess how efficiently these banks generate profit. We'll also see growth in balance sheet. So you'll see loan book growth, we'll see customer deposits growth. In terms of asset quality, which is basically how risky a bank's loan book is, this should improve, and you'll see this in terms of a decline in non-performing loans, which will mostly be driven by loan recoveries. So people towards particularly the end of 2021 were able to pay their outstanding loans. So that will be reflected in improvement in the bank's asset qualities. So as Jeff mentioned earlier, an example of a bank that released is Stanbic, which was actually yesterday, and they performed very well. Their profitability grew by about 40%. And impressively, their dividend grew to 9 shillings per share from 3 shillings and 80 cents. So that's a very fantastic opportunity if you're trying to take advantage of the dividend. Just a disclaimer, make sure you take advantage of this before what we call the books closure. So once the books close, you won't be able to participate in receiving the dividend payout. And for Stanbic in particular, the dividend closure is 20th of May. So make sure you cash in on this opportunity. So overall, I can say that the most impressive thing that we'll see is that most banks will be able to pay out dividends, considering that they'd suspended this for the last 2 years. So I would advise those who are keen to take up their positions, as I'd mentioned before books closure. In summary, when we look at the banking sector, I would say that the banking counters, especially the next few weeks, they present a good buying opportunity. Reach out to us should you have any questions regarding the sector or you need guidance around it, and we'll be happy to help you. Thank you.
Thank you very much, Ivy. Thank you so much. That's very interesting. 9 shillings per share. Do you know what dividend yield that works out to be given today's price, roughly?
It's
So you can just
shy of 10% for the year. The price is at 95
10%.
Yes.
So this is
one of the highest in the, sorry.
Go ahead, Ivy.
It's one of the highest yields in the industry, so it's a good dividend opportunity.
Yeah, so this is what we're basically saying by what you shared, that when you buy a company like that, you have the advantage of the price, if it does well, price moving up from where it was to where it potentially could go, which means you make a capital gain. The difference between the price when you buy it and when, maybe perhaps the price today, if there's a difference and it's positive, that's capital gain. But you're saying in addition to that, there's dividend, and this dividend return over the last 1 year, or right now, is 10%, which is really good.
Which is higher than the 1-year T-bill currently.
Exactly, it's higher than the 1-year T-bill. Fantastic. Okay, thank you for that. So there's a question on the chat, Jeff, and I want you to just speak to it. And the question is, it's always a rule that in the long run, the value of stocks will always rise. Maybe both of you can respond to this, but we can start with you, Jeff. How long is the long run?
We like to think of long-term, from 5 years and above, but that doesn't mean that, you don't get opportunities even in the short term. As I pointed out, there's already an 8% jump for Safaricom over the last 1 week. So for someone who would be interested in employing an active trading strategy, you can sell and then look to buy back, because no matter what direction the market is going, it's never in a straight line. There's always dips and pumps. So there's, ideally you look to buy when the prices come up and sell when they go up. So regardless of which direction the market is going, you can remain active and still make smaller margins along the way as we walk into that long run.
Okay, so I hear somebody asking, okay, so how will I know when to buy, which one? Where do I start? But perhaps I can let Ivy first answer the question. If you have anything else to add, Ivy, and then you can answer my second question, Jeff. Sorry, I should have asked it earlier.
Okay.
Ivy, how long is the long run?
So fundamentally speaking, a long run would be about 5 years, as Jeff mentioned. And then, as he also mentioned, that you can also employ these active strategies if you're looking to take advantage of like short gains. But fundamentally, it's between 4 or 5 years. Yeah.
All right. So the question was, then how do I know at any point in time, I think one of you said there's always an opportunity. How do I know what opportunity to take advantage of and where to invest?
Now that's when we come in as your stockbrokers, that since we're in the market every day, we see these swings on a daily basis. We are at hand to advise our clients on these opportunities as and when they arise. Okay.
Thank you so much. That is true. So I want us to, because I can see questions around elections and going forward. So perhaps we can just go into that element in terms of what strategy should somebody employ for 2022 where stocks are concerned. We have an election period coming. We have this uncertainty around Ukraine and Russia. We don't know how long that's going to last, whether they'll come to an agreement soon or not, or whether now there'll be a European crisis and war or not. We don't know. We also don't know whether we're at the end of this pandemic or whether we'll have a new variant that comes and disrupts everything again. So there's a lot of uncertainty. And so just want to hear your views. Of course, you don't know everything. and the variables that affect the stock market are so many. But generally, what would you say somebody should do going forward for 2022 where stocks are concerned?
Yes, as of now, all eyes should be on the banking sector. Let's take advantage of the opportunities that will arise as these companies announce. When it comes to the dates, Stanbic just announced yesterday. We expect Standard Chartered Bank on the 14th of this month, Equity Bank on the 17th, same as KCB and Coop Bank. ABSA should be on the 21st, Diamond Trust on 24th, and Bank of Kigali at the end of the week. So for now, I think we'd like investors to focus on the banking sector. But now looking ahead, yes, being an election year, there's always this wait and see mood in the market, and which is the case, and prices normally tend to come down due to the uncertainty of what's to transpire. However, if we look at historically, the market always rebounds after the election. So it's a good time to watch these prices as they come down, be prepared to buy. And then we believe by the end of the year, traditionally, the markets normally close higher than where they were around the election season.
Yeah, thank you very much, Jeff. Ivy, any additional views?
I reiterate what Jeff says for now.
Okay.
Yeah.
Okay, so then let me go to a few questions, even as we continue. So somebody's asking, how will one identify red flags when making a decision of whether to buy, sell, or hold? Ivy, perhaps you can take that one.
So there are different ways to, well, okay. If you can call them red flags, there are different ways to identify them. So an obvious would be, let's say, let's say a corporate governance issue, and that's highlighted maybe in the news, and it's something that perhaps cannot be, fixed fundamentally, or the numbers will not affect the corporate governance of the company. So that would be like an internal factor that you'd look at as a red flag, like let's say corporate governance. In terms of financials, then it would be things to do with profitability, revenue, sustainability. So if revenue is consistently going down, and there is no strategic plan towards, growing those revenues, or no strategic plan towards a turnaround, then that would be a red flag, and it would automatically tell you that holding that stock for longer than you are is not really a good idea. So it would be wise to let go at that particular point. So those are some of the examples of red flags you'd look at.
Okay, yeah. Thank you. I think also red flags, additional red flags I would perhaps give is if they don't seem to have a clear strategy where marketing is concerned. If they're in an industry, everybody else seems to stand out. They kind of have gone tech-based or using technology. They are not, things like that. Okay, they're not, I agree, it's not quite a red flag, but it's a disadvantage and would then influence the decision whether or not to buy or to go ahead and buy. But in addition to that, just to also add that we as people in the industry put out content and research around these companies. And so there's content you can read on our website, and also just giving us a call or an email, sending us and asking us questions will be able for us to tell you whether we think something's a buy, a sell, or a hold. Somebody else is asking, Alfred is asking, when I see Uchumi shares trading on the stock market, yet I believe Uchumi closed down. How is that? Now, I don't think Uchumi fully closed down. I think there's 1 or 2 stores that are still open. So as a business, they've not completely shut down. They're not doing well. They're really struggling. They are technically insolvent, but they're not totally shut down. Then we have somebody else asking, which bank is that? Stanbic? Oh, you don't know Stanbic? Okay. So Stanbic Bank is a bank, is one of the banks that is in Kenya. It's also part of the Standard Bank group that is based out of South Africa. Yeah, Stanbic, that's the one we were talking about. They just recently announced their results. Then there's a question around ABSA, the gold ETF. In light of the largest, I'm not sure what this means. On a scale of 1 to 10, where would you rate gold as a hedge in a portfolio in this market environment? Jeff, do you want to take that one?
Yeah, well, gold always tends to be where investors run to in terms of uncertainty, and we've seen the price of gold rally ever since Russia invaded Ukraine. So it's traditionally a commodity that thrives in times of uncertainty. However, we feel that the return offered there is not as lucrative as what you could be on the look to receive when you continue to bear out the pain. Be ready to take some risk when these prices come down, and as much as gold will appreciate slightly, it normally also corrects once there's some hint of stability.
Yeah. I also want you to answer this one, Jeff. Somebody is asking, what is the fate of some counters like KQ and Mumias? What are the options for investors who are holding those stocks?
For KQ, I think, unfortunately, we're tied up. It's about the takeover. So, unfortunately, it's been good. This is the second year, actually, since it was suspended. So it's just a wait and see. We really have no choice. And Mumia Sugar, it's back to that issue of what someone was calling red flags. Their corporate governance issues is what led them to get into the situation they're in. And to be honest, there's really no timeline for this one. It's one of those that you just wait and hope. But in the meantime, I still say be willing to take on more risk. And that's why we tend to focus our universe the stocks that have a good record of corporate governance, good track record of their financial performance. So that way you tend to avoid now some of the pitfalls of being invested in such companies.
Yeah, so true. And just to sort of say, when you have shares, you're a part owner in a business. So being a part owner, you accept to take the risk, whatever happens to that business. And so what happens is if that business does well, like Stanbic has just announced the results and they've done very well, then you benefit and you share in the profits of that company. If a company doesn't do well and they have debts, for example, and they have to pay their suppliers and those who have lent them money, you as a shareholder are the last person to be paid in the list of priorities. They will start with those they owe, and then even within debt, there's subordinated debt, there's the one that comes above the other. And so as a shareholder, by investing in the stock of that company or in the shares of that company, you're basically saying, I am willing to take the risk with this company as an owner and go with the flow, whatever happens. So it's so important for you when you invest in a stock market, not to be fully passive, but to keep track on what company is this, how is it doing? And my advice would be choose a company that you like and know about and have access to information on by virtue of the fact that you already have an interest. Because if you invest and forget about it, I mean, so many things happen. If you don't take action when you need to, then it becomes a problem. So it's really important to keep that in mind. Let's see. There's a question around the calendar for year-end results. But let me, before we go there, perhaps Ivy, you can, I guess, answer this one. Charles is asking, should one sell bank shares before they release their end year results?
I would say the prudent way is to hold and wait, to take a wait and see approach, and then dependent on the results, because typically if results go better than expected, then you'd ordinarily see a slight improvement in price, and then you'd have regretted selling it before the results came out, and vice versa. So I would advise on a wait and see approach, and then either buy or sell after the results have been released.
Okay.
Yeah.
Thank you, Ivy. Jeff, considering the high dividend announcement, what is the likelihood of a drop in share price and how do I balance the two dynamics? This is a good question because sometimes you find that the price responds to the announcement in dividends. Sometimes when the books close, now the time for dividend is over and the books have closed, sometimes the price comes down below that gain in the 9 shillings, sometimes it doesn't. So how does somebody manage that balance?
Normally, yes. Once the book closes, such that any new investor does not enjoy the benefit of having the dividend, yes, the price does drop. However, traditionally, the price drop is normally temporary because if you look on average, maybe 6 months down the line, prices normally tend to go back to where they were and even above the book closure, especially for the bigger banks. The more actively traded ones and that have more of the foreign participation. So that price drop is normally quite temporary. So we would advise investors when it initially happens, there's no need to panic. You can just wait it out and you'll soon realize that the price does end up recovering because a company paying good dividends is doing well. And as the company does well, the reward normally tends to show up in the share price going up.
Thank you so much. Phyllis, yes, we do have an app for buying and selling shares that's available. I'll ask Betty, who's on the call, to just put that on the chat for you. Now, Ivy, somebody's asking about Equity Bank. They've not given a dividend. And what's the likelihood of dividends this year?
Actually, in their third quarter results, they announced a new dividend policy, which should be about 30 to 40% payout. So they are confident that they'll be able to do that in the long term. So that's an investment consideration because that shows sustainability in dividend payout. So just to clarify, they did mention that they actually have a dividend payout of 30 to 40% going forward.
30 to 40% going forward?
Yes. Payout, yes.
Maybe you could speak a bit on Equity Bank because it's quite an interesting bank in terms of just their strategy,
right.
Shift into the region, and what you're thinking around their performance or the announcement of the results coming in the next few days. Yeah.
Okay. Equity Bank is it is an interesting bank. First, because they're pioneers in the digital space, so they have an edge over, let's say, the rest of the industry. So even in terms of their regional expansion strategy, they're able to replicate their digitization strategy within the rest of their other subsidiaries. So they seamlessly expand. A subsidiary to look out for is DRC. DRC is very underserved, underbanked. And if you check the recent quarters, they've been growing their loan book by about 60%, 50%. They're actually the growth driver for equity right now. So in terms of their growth drivers, the investment considerations, regional subsidiary is a big plus, their digitization strategy. And owing to that strategy, they're also able to grow their retail footprint. So what you'd call, they bank by volume, right? So they're a leader in the space. So I would consider Equity a good buy, especially for the long term, because they haven't even hit the surface of what they could do with the regional expansion strategy.
Yeah.
Yeah.
That's awesome. Thank you. Thank you very much for that. There's somebody asking about prices of stocks being listed at a high price and then going down below their listed price. I think that's what we were talking about by saying that when you invest in a company, you have to take time to understand whether it is selling at a high price beyond its fair value or not. And so that's why it's important to get advice from financial advisors and research analysts to get assistance to understand at what point is it good for me to buy. Now, Joyce, the payout for the equity bank dividend policy that Ivy was mentioning is the percentage is based on their earnings. It's based on their earnings. So how much of their earnings will they share with shareholders? So that's what they mean by the 30 to 40%. So this is an interesting question, and either of you can take it. I think maybe we can try Jeff. How many stocks can you recommend for one to make a diversified portfolio?
We could look at maybe say 4 to 5 different stocks, ideally touching on the different sectors in the markets, just to cover against, an industry risk.
Yeah.
But although at the moment we feel strongly because of the evidence and what we expect to see from the banking sector, for now we feel it should be heavier on the banking side, at least for this first quarter of the year.
Thank you. So there's a couple of questions around process operations, changing bank accounts or account details when your CBSC account has become dormant and so on. Please write to us, info@fib.co.ke, so that we can address the specific issue. Some of them will just require you opening an account opening form, which also serves as an amendment form, which can then be used to make the different changes that are there. So if you have some of those issues and have posted a question on that, I won't answer specifically to each of you. Just write to us and we'll be able to assist you on getting those sorted out. So there's a question around Sandra, let's see. Also, how can I change the, okay, 1 second. I'm sorry, the questions are so many. I think, Jeff, you've answered that question, so it's fine. There's a lot of what shares should we buy? I think Jeff has been very clear around focusing on the banking sector for now. How does Faida support foreign investors? So, with foreign investors, it doesn't really matter. I mean, the market has changed so much. Everything is done electronically now. I haven't seen Jeff in the office for 2 years. He's not touched at a desk in the office for 2 years, yet we work in the same company. So we assist anybody from everywhere. We have clients from Australia, we have clients from the US, we have clients from Dubai, we have clients from Europe, everywhere we have clients. And it's easy because you don't need to be physically present. You can use, we have an online share trading system. You can also just send emails and we'll be able to respond to you and assist you with whatever you need in the different products that we have, including money market funds, investing in bonds, investing in shares. So whether you are from, I saw people have joined from Australia, from Europe, from the US, from the United Arab Emirates, wherever it is that you're from, we're able to assist you and support you as a foreign investor. In terms of the difference though, if you are a Kenyan in a different country, nothing changes. If you are a foreigner, so you're from a different country other than Kenya, you can still invest. Kenya is one of the very open African countries. We have no issues with exchange controls. You can transfer money from here to anywhere in the world and vice versa. It's not an issue. The only difference it makes is in the tax that is charged on an investment. So for example, if you're trading in equities, you pay a slightly higher tax of 10%, I believe, on withholding tax, whereas locals pay 5%. If it's bonds, you pay 20% tax when locals are paying 10%. So that's really the difference, but access to opportunities is available. So I've seen a question about asking about derivatives. Today is specifically on stocks. We will have another one on derivatives because that's a whole other conversation and we don't have the time to get into that now. We would prefer to just deal with the questions that are here for today. So there's a couple more questions I haven't actually gone through yet. So if you just bear with me. Ivy, somebody's asking, could you please share some insights for NCBA? And I guess this one refers to their performance. I guess there's also the combining of the two banks. That doesn't seem to have done very well because they're not performing in terms of their stock price. Perhaps you can just speak to that a little bit.
So for NCBA, So obviously there's been a bit of concern around the merged entity, but especially towards second half of 2021, if you look at the numbers, you can see that there have been improved operational efficiencies in terms of costs. So initially there were cost, replications and duplications as well. But now towards the second half of 2021, we've seen improved cost operational efficiencies. So the other thing that is probably a good thing for them is perhaps their digital lending through, through the partnership with M-Shwari. The headwinds, I would say headwinds being disadvantages would be what I talked about earlier, being asset quality. They've had quite a number of challenges in terms of their loan book and people being able to repay. So overall, as a stock, it would be a stock that you would perhaps hold in your portfolio, because the merged entity is still undergoing those, the ramifications of joining two companies, of which can take up to 2 to 3 years. So it's a stock that you'd hold with the hope that strategically they're looking up and things will look up.
Thank you, Ivy. Thank you very much. And there's a question around what percentage of your portfolio should be in the stock market. So it depends. What happens is there's something called an asset allocation strategy. Asset allocation just means how much of my portfolio should be in cash, how much of my portfolio should be in bonds and money markets and equities. And there's so many different, you can have real estate, you can have cryptocurrency, you can have, all kinds of different investment opportunities. All those are assets. Now, what percentage should you have in the different assets? It depends. It depends on your age. It depends on your what your risk profile is, and that will be determined by, do you have dependents? Do you have a family? Do you have children? How old are they? Are you about retirement age, or are you just sort of getting into your first job? So a 20-year-old versus a 50-year-old would have a very, very different structure where their portfolio is concerned. We have rules of thumb, but I don't like to use rules of thumbs, to be honest, because it needs to be determined by you as an individual. How much money do you have available to you to invest in the stock market? Meaning, how much money do you have available to you to put at risk for at least 5 years? Is that 40% of your portfolio, or is that 10% of your portfolio? You have to decide that for yourself. But I think the important thing to know is that the stock market is generally risky. It generally needs time, but you could, benefit within a short period of time, but also needs you to pay attention. You can't just leave it like you would a bond. You kind of need to know, what have I invested it in, and what am I, should I be buying now? Should I buy more? Should I sell? And so it needs you to be the kind of person who's able to kind of keep track. As investment bankers, we are here to help. But hardly will we call somebody and say, by the way, on the 26th of June in 2009, you bought Stanbic. Now it has come to XYZ price. Now you should sell, because it's not practical for us to do that. So we make available information on these stocks through providing apps. We also send out emails weekly so that you're able to know what's happening. So if you're not that kind of a personality, then the stock market, you perhaps want to invest in it through a fund as opposed to directly. But if you're investing in stocks directly, it requires you to have a bit more interest and to be a little more inquisitive and interested in what you're investing in, because really you're buying a company that you will own. So Kevin is asking the next time we should tackle the derivative market. And Kevin, we have taken your challenge and we will schedule it in part of that process. Ivy, Bimji is asking, why is Diamond Trust not doing well?
So for Diamond Trust, the main issue would be they're exposed to high-risk sectors. So it's a non-performing loan issue, asset quality. So they are largely exposed to high-risk sectors. So majority of the clients, sorry, or rather they're experiencing clients, big clients who are not paying. So it's affecting their income statement. So the income statement is neither here nor there, and that's largely due to non-performing loans. That would be the main risk for them.
Okay. Then somebody's asking about just a clarification on tax. And I mean, for foreign investors, what happens with tax? It's just the tax that you pay on the earnings of whatever the investment is. So I had said that if you buy shares, the tax on the shares is based on the dividends that you earn. So if you're a local investor, as in Kenyan, whether you live in Kenya or not, the tax is 5%. If you are not Kenyan, the tax, I believe, is 10%. If it's bonds, interest is usually 10% on bonds. Well, it depends on the period of the bonds, because there's some that are tax-free, and in that case, then even for you, it's tax-free. So if it's an infrastructure bond that you're buying, even for a foreigner, it's tax-free. But where there's tax of, say, 10% for a Kenyan, it will be higher for a foreigner. All right, so somebody's asking about our view on car in general. It's a stock we don't really look at. I don't know, Ivy, if you've taken time to look at that and if you have a view on car in general.
Well, for car in general, it's not a liquid stock, but for what I know is they recently announced their results, of which they actually gave a dividend payout of around, should have been 3 shillings, and a bonus as well. So in terms of financial results, that's the highlight I can give you. They announced a dividend payout and a bonus as well.
Okay, thank you. So there's a question around, I'm sorry, what, I just lost it. Bamburi cement. What's your view on Bamburi cement? Ivy, you're muted in case you're speaking.
Oh, sorry. Could I get back to who asked the Bamburi question?
That was Emmanuel.
Yes.
Was it Joanne Mideva?
Joanne. Thanks, Joanne, for your question. If you'd allow me to get back to you personally, so I can give you an updated view on the company.
Okay. So there's many questions about specific stocks. My preference is if we can just reach out to us. We do have an email for research specifically. It's research@fib.co.ke. And we're able to then answer your questions specifically on the different stocks that that you have. And if you want to buy bonds, Sylvia, no, you don't have to visit our offices, but just send us an email, info@fib.co.ke, and we'll be able to advise you on the way forward. Jeff, I would like you to, we're coming to a close now, and I'd like you to just give an overview and a summary, sort of concluding this session on stocks around just your view. I think people are still concerned, yes, you've said stocks are good, but is this a time to buy, and how do we buy? How do we invest in stocks is what I mean. What's the strategy we should employ? I know you did touch on it before, but I kind of just want a parting shot where investing in the stock market is concerned. The reality is 60 to 70% of our stock exchange, unfortunately, is controlled by foreign investors, and locals are not investing and taking advantage of the opportunities that lie within this market. And so, Jeff, if you could speak to that, it would be really great.
Okay.
also
Yes.
around, the elections and, the uncertainties. Yeah.
Yeah, so in times of uncertainty such as this, that's where we'd like to see people employing more of an active trading strategy, where you take advantage of the small movements that are there in the market. Because yes, we don't know how things will become by the time we hit the elections in August. But in the meantime, we feel that there's always these opportunities here and there that investors can take advantage of when it comes to some of these price movements. So I'd say for now, let's stick to a short-term strategy. And especially on the active stocks, namely the banks and Safaricom and East African breweries. Those are the stocks that we see most of the activity on, and that's where we feel there's an opportunity for active trading.
Thank you very much, Jeff. Ivy, you've seen some of the questions that people have asked around, all the single stocks that they're asking, is it time to buy this one? And can I buy this one? What's your thought on this other one? What advice would you give somebody who's wondering, how do I get information? How do I know what to buy? So that they know what action to take.
Information on how to invest?
Just how to make an investment decision where stocks are concerned.
Okay. So in terms of, I don't know if I understood your question correctly, sorry. You mean how would you make an informed decision?
Yes.
Okay.
Where do you get information from?
Uh-huh.
Where do you get information from? How does somebody make a decision on whether to buy KCB or Safaricom, for instance? Like what's the process that you'd recommend for somebody who's a layman to go through and make a decision where investing in stocks is concerned?
Okay. So if you're looking for information regarding how to invest, there's first of all, you can look at, if you want to be actively involved and you want to sorry, excuse me for a second. Sorry about that. So you can get information from annual reports if you're looking to invest in companies. You can get information from ourselves as well. So we put out a lot of content regarding where to invest, what to look for, your stock recommendations, the advantages and disadvantages of investing in different types of opportunities. So you can look out for our content from research at fib.co.ke.
Did I see your hand up, Jeff?
No.
I saw okay.
No.
Yeah, so guys, we try and help as much as possible as well. If you can just send us an email, research@FIB, we'll be able to put you on the mailing list also, because we send out information. And if you have any specific questions, we're happy to answer. Otherwise, we are here to assist you. We shall be communicating what our next session will be on. Again, as I mentioned earlier, we don't just put out information for information's sake. What we want to do is be very topical in the webinars that we're having, so that we are dealing with opportunities that are existing or stuff that has happened that we need to sort of give guidance on and discuss and give our thinking around what's happening. So thank you very much for joining us. We are grateful. We have all your emails and we will send the recording. I can see some requests for some people. And feel free to also suggest if there's anything specific that you would like us to cover. But in the meantime, please don't ignore stocks. I know some of you bought some at 35 shillings and now they're at 4 bob. Start again. and look for money and start again. There's always opportunities to invest in the stock market. This year presents a very good opportunity to accumulate some if you're a long-term investor. And as Jeff said, it's also an opportunity for you to trade, come in and out. And Jeff and the team in our research, in our trading department is very good at that. So feel free to also consult and ask, you know. I have heard it said you don't have because you don't ask, and we're here and available to assist you. So have a wonderful evening, everybody. And we shall see you soon. Bye-bye.
Thank you, everyone.